All right, let's bring in JMP Securities, Trevor Walsh, for more on Palo Alto. Trevor, your thoughts? What's sending the stock higher? Is it a sigh of relief that like there's not bad news or more bad news here?
Yeah, Morgan, thanks for having me. I think that's probably the gist of it. The investor sentiment kind of heading into the print was definitely erring on the negative side, just based on this more peculiar Friday scheduling. Management kind of noted that there was some scheduling conflicts, or at least a lot of things coming together with their sales kickoff scheduled for next week. And so it was more just a matter, nothing necessarily negative, just more of that. Although we'll see what they have to say on the upcoming analyst call for the back half of the earnings call.
What's the key question you're going to ask?
We've been getting a lot of questions around the product revenue line specifically, which really reflects their firewall performance. The typical refresh cycle for those normally lasts around 18 months, and we've already seen now pretty much 24 or 8 quarters, 24 months of solid performance, double-digit growth on that end. Before the refresh really started, they were hovering right around more single-digit 3% type of growth rates on that product revenue line. So investors are just kind of wondering how much is really left in the tank there, and whether the kind of more software parts of the business will actually be able to kind of pick up the slacks once that refresh cycle ends.
Gotcha. Okay, and then I guess in terms of you mentioned hardware. I mean, there's been some talk that maybe they're going to start to wind down further the hardware piece of the business and lean in harder to software. Your thoughts?
Yeah, they've always really been leaning. I think the CEO, Mr. Arora, has really kind of helped to transform this company away from a hardware company into a software company. So I think that's been part of the story for a while. So I think, yeah, I think we'll certainly be watching to see once that refresh cycle and the product revenue growth sort of starts to slow down. But I think from when you see how well positioned Palo Alto is across their kind of primary pillar areas, whether it's what they're doing within zero trust, within cloud security, or even extended detection and response, the software story is strong, and those are all 3 really big areas of growth that we're watching a lot. So I think they're well positioned to, I think, have that software, those line items really power through as the product line item kind of slows down a little bit here.
Yeah, I mean, as you're talking, the stock is moving higher. It's now up 8% in after-hours trading. You had an outperform rating on the stock. We've seen a double-digit pullback since the start of the month. Do you buy at these levels still?
Yeah, absolutely. I think in all fairness, with a lot of the names in our coverage have seen a similar kind of pullback over just the last few weeks. Notwithstanding Palo Alto's, again, more curious announcement on the 2nd to have a Friday earnings call, which I think left some investors on the fence. I think this is still a great buying point. Our $300 price target is still kind of well within the realm of where our comps for the group on a free cash flow basis are trading now currently. So I think it's even with this kind of pop, I think it's we like Palo Alto going forward. Like I said, great software story, main kind of marquee name within cybersecurity. So I think all systems are go, especially out of, I think, what hopefully will not be any kind of significant negative news coming out of the rest of the analyst call today.